Bags.
Hey gang, I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a walk through illustration of how to properly compute for notes receivable. So if you're unfamiliar how to account for notes receivable, don't fret gang, I dropped a link to get you up to speed in no time. So with that being said, let's get it. So it tells us a table of note receivables are as follows. So let's see what this table's talking about. Alright, so we have a table for 3 notes, various time periods. And it says for each of the note receivable, compute the amount of interest earned during the year for 2024. And round to the nearest dollar. And they say use a 365-day period. Okay, gang. This is pretty easy. So, basically we understand that note receivables are long-term assets. But unlike accounts receivable, note receivables involve interest. And so we know, gang, that interest is accrued throughout the period of the note, and at the end of the life of the note, the company will collect the sum amount of principal plus interest. Therefore, we need to learn how to appropriately calculate interest. It's basically the principal of the note times the interest rate of the note times the time. But you need to understand when reflecting time for a particular note, it has to be annualized, gang. And so as we see with these particular time periods, we're going to have to adjust them for an annual basis. For example, in order to calculate the appropriate interest revenue earned for note 1, we're simply going to take the principal amount of $30,000 multiplied times the interest rate of 6%, then multiply times 6 months over 12. Why? Because we have to annualize the time frame, gang. Likewise, for note number 2, we simply going to take the $12,000 times 10% times 270 days divided by 365 days. I already feel that you guys are catching along just fine.
Yes, definitely.
Note number 3's interest calculation would simply be $14,000 times 14% times 75 days divided by 365. And last but not least, gang, for note 4, we're going to take the $100,000 multiplied times 7% times 10 over 12. And so if we simply input those values into the correct cells and check our answer, nice work, gang. So there you have it, a really quick illustration of how to properly calculate interest. This is very critical in terms of you to be able to properly record not only the accrued adjustments for interest at the end of the period, but also the collection on the note receivables. So with that being said, you are now closer to chasing the bags with this accounting information. So won't you do me a favor and smash that like button, smash that subscribe button, and share this channel with your friends so they can chase the bags too. I'm Dr. Who, and it's always a pleasure for you to be here, and I'll see you soon.
Bags.